Famous Brands will be taking Debonairs to India, where it will open its first restaurant in Mumbai in July. The group plans to open 5 restaurants in the capital in the short term. Famous Brands Chief Operating Officer Darren Hele joins us now on the line for more on this. Thanks so much, Darren, for joining us today. First up, why the move into India?
Good afternoon, Alicia, and to you and to your viewers. For us, it's been a long time coming. We've been looking at lots of emerging markets, and this particular one has always fascinated us. I think it's always easier when you have the English connection because the language barriers are reduced. And certainly we've been watching a lot of the global players entering that market, so it's been quite attractive for us. But I think most importantly, the real reason now is that we found the right partner to do it with, and that's really the key reason why the timing now is perfect for us.
So let's take a closer look at that strategy, because you're not going it alone. As you've highlighted, you've got partners on the ground there, and perhaps lessons learned from those companies who've tried to implement a copy-paste model when venturing into territories outside of the South African borders.
Yeah, I think we'd like to think we've learned from other players and also from our own mistakes. I mean, the copy-paste thing is exactly, as you say, is quite detrimental. And that's exactly what we're not doing here. And the partner we've partnered with understands the local territory. They're particularly strong in the Mumbai region, and they understand that business. They've been trading in India for 50 years, and we know that they're going to give us the kind of the expertise that we require. And likewise, I mean, the skills transfer will come from our side. And they're going to be doing the implementation on the ground.
So give us a sense then, Darren, of the capex spend you're looking at here, because access to retail trading space in high-density markets like this comes at a premium price.
Yeah, look, that's the key challenge in a market like that, and good retail space is critical, and it does come at a premium, as you say. And I think that certainly from our perspective, that's where one's going to have to be a little bit patient, but quite entrepreneurial, which I think our partners are. And we will make sure that we fit our model to that. We are looking at quite small spaces, so relatively we think that there's a lot more opportunity in that end of the market to get in. But certainly we're going to be focusing on that. We don't think that there's going to be significant capex required to achieve the growth in terms of getting the sites, but certainly the capex will be on the physical infrastructure when you fit out the site.
You say
the capex will be involved.
You say that you've got to be patient. What kind of return on investment targets have you set out?
Well, bear in mind that the return on investment will be the operators. So, I mean, in terms of the Indian context, we need to get some of the models right in terms of what those particular returns are. But we're looking at probably a capital investment of in excess of R1 million, probably around there per restaurant is probably the number that we're trying to land initially. And one would be expecting returns within the Indian market that are relevant to that market. So not from a South African context, from an Indian context. And they are slightly higher. I mean, the interest rates are higher. So they'd probably be looking for, a return on investment, of around 15%. But I can't comment necessarily on their investment criteria on each particular site.
When it comes to the landscape, what's your assessment of the competitive environment you're venturing into?
Oh, look, it's robust. It's not going to be an easy climate in terms of that. The global players are there. I mean, they're certainly not entrenched, but they're there and they're active. But we think that the market is growing significantly enough, and that there's enough of an unbranded sector that will over time become branded for there to be space for another player like ourselves. But I mean, it's certainly not going to be an easy challenge. I mean, they're there, and we've seen how they've had to adjust their business models. And again, I think they've learned from the previous cut and paste areas that they may have made.